The spot market is a contract, right? So they can create a whole bunch of gold that does not nor ever will exist. So in the short term, anything is possible, right? They can create, I mean, didn't you say, weren't we talking about a deficit in the physical market earlier? Well, if the spot markets, whether they're gold or silver, actually reflected the true deficit for gold or silver, the prices, if it was a true free market, would be a lot higher. So, and again, a rising gold price is an indication of a failing currency. Governments and central banks do not want you or I to know that the currency is failing. And the other piece that I would like to kind of throw in here, and that is we all work. I mean, the reason why we have money to begin with is so that a society can specialize, and you have a farmer, you have a baker, you have a lawyer, etc. And so they needed a tool to make sure that you're always fairly paid for your labor. And that's why gold became the primary currency metal, because it's the only one that actually does it. So you have your gold and you're trading your labor for somebody else's labor, which is a fair exchange. And by the way, the CBDCs recently, I don't know when they changed this, but I could tell you I was very troubled when I saw it. I was preparing for some event and I went in and looked at the functions of gold and at the treasury, because I wanted to, capture that image. And they removed the short-term store of value because dollars, government money through inflation robs you of that. So it forces you to take risk so that you can maintain what you already worked for. Okay, a yield curve inversion, a global yield curve inversion just occurred. Do you know that that has never happened since they began tracking the global yield curve? So this is a first time in history, and what that's telling us is that something extraordinarily nasty this way comes. And look at all the warnings we're getting about forced selling and market drops and corporate earnings and inflation and blah, blah, blah. It's because we're shifting systems. But this has proven to go through all of those calamities.
Correct. Yes.
Right? It's a key component of dynastic wealth, which is wealth that lasts in families at least 300 years. So yes, exactly. And we are in for it huge in 2023. What if all of these cryptocurrencies were created to get the population comfortable enough to adopt a CBDC? What if it was never really intended to be a long-term piece, just a short-term piece, which if introduced by the government would probably have people going, no. But if it's introduced by a private entity, people go, got a lot of visibility, still gets a lot of visibility, whether it's positive or negative, it gets a lot of visibility. It gets a lot of eyes. And I can't speak for Australia, but a recent report that I read said that 16% of the US population has bought and sold cryptocurrencies, right? That's more than on gold by a wide margin. So they do have adoption. And what if what's happening is about showing private cryptocurrencies bad, government central bank cryptocurrencies good. And the truth is whether it's fiat money or cryptocurrencies, they have use in one area. And it's all become a big trade. Whereas you look at gold and it's used in every single sector of the global economy. So 100% of the time there is demand, maybe more, maybe less, but it doesn't go to zero because there's always the broadest base of buyer. And how many people talk to you about when the stock market is going down, that the spot gold market goes down too, right? And why is that? Because if you have borrowed to buy those stocks and they are going down, you're going to get a call from your stockbroker. We need you to deposit more money. So maybe you have to sell something off. And it's not whether or not this is what I want to sell. It's what will the market buy, right? So yes, again, it goes back to the fact that it's used globally in every single sector. It's the most liquid asset that there is because it runs no counterparty risk, right? And it has the broadest base of buyer. So yes, and I actually, I was able to use my gold really as collateral for a short-term loan. So it really is simple. It's whoever holds the gold, you're actually holding real wealth that's completely marketable. And you did see what's happening in Ghana, right? In Ghana. So, I mean, they're accumulating gold because nobody wants their currency. So what are you going to do as an individual when nobody wants the currency? You better have barterability and real wealth, because the other part of that are the opportunities that always present in crisis. But you have to be in the right place at the right time with the right asset. If you've got something that nobody wants, you have nothing. You know, there are so many different ways that they can do this restriction as well. But once we are in full digital form, I mean, the central banks are talking about being able to tweak the money constantly. Oh, yeah, I'm real comfortable with that one. I mean, are you kidding me? And they want to remove all of the functions of money and take it down to two, which is just a tool of barter and a tool of measure. Forget any level of holding value, because they want to take us into a negative. Look, they've inflated all the purchasing power value of the currency away. They have to attack principal. That's what negative rates are about. And they keep talking about no limitations on how deeply. So now you get paid, and as soon as you deposited it to the bank, it's less than when you got your check or the deposit, because you won't get a check. It'll go directly in. You tell me why that's okay with me. I'm not even going to be able to get paid fairly for my labor, and I wasn't getting paid fairly to begin with because of inflation.